We need to know why those arrows appear, and when they do appear, where are we going to enter the market? Where is our stop loss? Where is our take profit? And what we're going to do to maximize that winning setup. Hi everyone, what is going on? My name is Jeremy Palmer and welcome to another episode with the Binary Destroyer 7.0. Now in today's video, I'm going to answer the very simple question of why do I always stack my trades? Now, hopefully by the end of this video, it will make a lot more sense and you'll be like, I see your logic behind this, Jamie. So let me just move myself out of the way so you've got a clearer picture. Now, when I started my trading career, I started as a binary trader. If you don't know what binary is, basically it's a bit like Forex, but you have an expiry time. So let's say 1, 5, 15, 20, half an hour, and sometimes even more than that, a 4-hour or even daily expiry time. What that means is basically I choose a direction, either up or down. And if I get my prediction right in a certain expiry time, I win the trade. So I predict that price is going to go down within 10 minutes. If it goes down within that 10 minutes, I win the trade. Okay. Now, the reason why I used to stack my trades like this was I would make a lot more profits. Okay. And I realized that when I actually looked at the mathematics behind it, the maths and logic behind it, it made sense to stack my trades. Now, let me give you an example here, right? Let's just say I take one trade, okay? And I take one trade at £1,000, okay? One trade at £1,000, okay? So if I win the trade. If I lose the trade, I lose £1,000, okay? Let's say, I'm just giving you an example here. I'm going to use this kind of line chart like this. Let's say price goes up like this, okay? And I decide that I'm going to take a sell just here at this little point here, okay? A 10-minute expiry time. Price goes up, price goes up, price goes up, price goes up. Starts to turn now, okay? And then what happens? Oh, my 10-minute expiry is up and I've lost the trade. And then what happens after 11, 12 and 13 minutes? Oh, price goes down. So I lost the trade by literally 1 minute. Okay, if it was 11-minute expiry, I would have won the trade. But 10-minute expiry, no, I lost the trade. I lost £1,000. Now, what I realize now, if I break that £1,000 down into 10 individual trades, so rather than taking, let's say, one trade at £1,000, I would take 10 trades at £100. Now, I'm risking the same amount of money now, but I'm spreading my trades. So logically, or if you actually look at the numbers behind it, I am more likely now to make a profit. Let me show you why. Okay, so let's say now I start taking, price goes up like this, and I decide, okay, I'm going to take one sell here. 10-minute expiry. Price goes up, and I start taking another sell. Then as price starts to turn like this, I take another sell. As price starts to turn down now into my favor, I start taking another sell, and then another sell, and then another sell, and then another sell, like this. So as the trade goes down now into my favor, I'm starting to add to my position. I start to stack my trades. So I'm spreading the load. Now, if you look at these two trades here, I'll just make it a different color now so you can actually see. And I'll make these with an arrow like this. So these two trades here lost. So I lost these two trades because of my expiry time. Price didn't reverse in my favor as quick and I lost the trade. But these trades here all won. Now see what I'm doing here. I've got the same size risk. So I'm still risking £1,000 whether I take one trade or 10 trades. But what I'm doing now is giving myself a greater chance of profiting from this particular setup, because even though these two trades lost, these trades won. Okay, so what you can see now is I'm profiting from a setup. Now, I can't remember who said this. I think it was Warren Buffett, and he said you should never close a winning trade early. Now, what he means by this, as the trade starts to go into your favor and you start profiting from that favor, you don't suddenly want to close that trade off. Okay, what you'll find a lot of traders will do is they will add to that position. They will use different target areas. So let me show you now on why I stack my trades with Forex, and we'll use a perfect example now with the binary destroyer. Okay, so I've got a Mogwai signal here. Okay, we're going to trade in the Mogwai strategy. So we're looking for three things here: MACD overbought or sold. In fact, I'll bring myself in here now so you can actually see. I'll make myself just a little bit smaller like this. So hi, you can see me, we're rocking. Okay, so I'm trading the Mogwai strategy. Three main rules: MACD overbought or sold, Mogwai signal, resistance area or support area. So I've got a Mogwai arrow, that's great. My second confirmation is the MACD going overbought. Okay, you can see now the MACD starting to go overbought now. Okay, so that's my second confirmation, is that yes, I have a Mogwai signal. I have the MACD going overbought. My final combination is a resistance area. So I'm just going to zoom out now. Do we have a resistance area at this level here? If I actually go this, I've actually got this loaded up on the 15-minute charts as well. Okay, I've got a nice resistance area here. Okay, see that nice bit of resistance here? So if I just bring this up like this, I'll just move myself so you can actually see. So I can draw on my charts. There we go. I'll make myself white so you can see. There we go. A nice bit of resistance, a nice bit of support. So I've got a bit of resistance at this level. Resistance, MACD overbought, Mogwai arrow. Perfect. I'm going to enter the trade. Now remember what I said on how I trade binary. Okay. I know that price is likely to reverse at this level. So look at the rejection wicks now. See how we're rejecting from this level? See how we're getting engulfing candle now? I'm not going to take this trade now until we close below that TCA line. Okay, so just now. Okay, I'll probably enter on the next candle. There we go. Okay, so we're now below that TCA line. The MACD's just crossed over like this. Okay, and that TCA line is just started to turn red. So I'm going to enter a trade now. I'm going to enter one trade. I'm going to put a 8 pip. In fact, I'll put a 10 pip stop loss like this. No, here we go. I'm going to put a 10 pip stop loss like this. And I'm going to put a 10 pip take profit like this. So I'm taking one trade now. A 1-to-1 risk reward ratio. Okay. Meaning, I don't know, 1% of your account to make 1% profit. In terms of money, let's keep it simple. I'm risking £100 now to make £100 profit. Now, what I would do is I will watch this trade. Okay, I want to see what this trade does. So let me just, I'm going to zoom out now so we can actually, here we go. So you can see my stop loss. You can see my take profit. I'll do but candlestick by candlestick. Here we go. Next candle. Still going sideways. Next candle. Okay, starting to drop now. See how we're starting to drop. Look at that TCA line. Look at the TCA line. It's turning red. Okay, let's see what happens now. Okay, we start to go down in my favor. So, as this trade is now going down into my favor, I will start to take 5 pip trades. Okay, trying to maximize my position now. Now, what you can see here is I took one trade and I was testing the market. If this trade lost, great. I've lost one trade. It is what it is. It's only 1% of my account. Okay, I've got another 99% to go. As this trade now goes down into my favor, I'm going to look at the 15-minute expiry. Okay, look at the 15 minutes now. Nice rejection from this level. Okay, so what I'm going to do is I'm going to take another 5 pip expiry like this. So as the trade comes down now, again, we start to pull up slightly. Okay, we might bounce off this TCA line. Let me see what happens. Look, see how we bounce off that TCA line? The TCA line being the green line. So it goes from green to red. Okay, if it's in an uptrend, it's green. If it's in a downtrend, it's red. Because it's red, it's a downtrend. So watch this. Okay, here we go. You see how we start to bounce off this TCA line? What I'll do now is I'll take another 5 pips expiry. So I keep adding to my position because this is going to potentially now go down into my favor. See how we start to come down? So let's see what happens now. Let's just have a quick look at the 15-minute expiry. Okay, 15-minute expiry, 15-minute time frame. Okay, so the 15-minute time frame, it is now bounced off my TCA line, which is fine. I expect that to happen. What I want to see now is that TCA line to close below the 15-minute time frame. Again, I've got a Mogwai signal on the 15-minute time frame, and I'm just waiting for that MACD to cross over on the 15 minutes. Okay, here we go. We're starting to close below the TCA line on the 15 minutes. Okay, let's see what happens. Okay, there we go. We're now below the TCA line. The 15 minutes is not really doing a lot. Nothing's really happened. Okay, we come down, we come down, we come down. We come down. What's the 15-minute expiry saying? Okay, now look at the 15 minutes. The 15 minutes is now below the TCA line. That TCA line is turning red. So again, what I'm going to be doing is taking another sell at 5 pips. I'm going to keep adding to my position as this trade goes down in my favor. Okay, so see what happens. Okay, so trades start to hit take profit. Let's see what happens. We'll go back over to the 5 minutes. And there we go. In and out. Okay, so what you can see here is that I've maximized my profits from one setup. And that's why I stack my trades. I initially take one trade. I test the market. Is this going to be a winning trade? Is this going to be a losing trade? I watch to see what price does. If price starts to go into my favor, starts to close below the TCA line on both the 5, 15 minutes, whatever time frame you're trading off. If it starts to go down into my favor, I keep adding to my position. 5 pips, 5 pips, 5 pips, like that. Okay, sometimes I will close some trades off in a loss, but what I'm doing is maximizing my setups or my trades on one setup. Now, to be successful at trading, okay, I want to quickly go over this now. We break being successful down into 2 parts: your entry and your trade management. Okay, so there's two sides of being a successful trader. When you enter the market, so your strategy and your trade management. If you want to be a successful trader, you've got to get both of these right. What I mean is this. Let's say I teach you a strategy that gives you a 99% win ratio, or let's say even 90% win ratio. Okay, let's say you take 100 trades and you get 90 of those right. You can still lose money. Why? Because your trade management could be wrong. You could be getting stopped out. You could be losing trades. You might not even be using a stop loss, and you could end up in drawdown and blowing your account. That has nothing to do with the strategy. That's to do with your trade management, where you set your stop loss, where you set your take profit, and how much you're risking per trade. Okay? If you are not getting, let's say you're only getting a 50 or 60%, or let's say even a 40% win ratio, okay? If you're getting a 40% win ratio, that potentially could mean that your strategy is wrong. Your entry point is wrong, okay? Not the trade management. So if you want to be successful, you've got to figure out what you're failing at. Is it your entry into the market? or is it your trade management? You could be picking all winners. Every single setup that you take could literally be all winners, but you could be losing all those trades as well. And the reason being is because your stop loss is in the wrong place. So if that's the case, you've got a problem with your trade management. I actually teach a lot about this, okay? And what I do to teach people this is, first of all, don't ever take a trade. What I want you to do, okay, regardless if you're a BD member or not, is don't take a trade. Do 100 predictions. Out of those 100 predictions, can you predict the market in your favor? If you can get 80 or 90% of those predictions right, then your entry plan is perfect. There's nothing wrong with that. Okay? If you then look to start taking trades and you're getting losses, then you know that your entry plan is right because you're getting your predictions right, but your trade management, where you set your stop loss, where you set your take profit, is wrong. Okay, if you do 100 predictions and you only get 20 of those predictions right, then you know you need to learn about candlestick patterns, support and resistance, finding a profitable strategy. Okay, and this is what I say to my BD members, okay, is that it's not just necessarily about taking arrows. We need to know why those arrows appear, and when they do appear, where are we going to enter the market? Where is our stop loss? Where is our take profit? And what we're going to do to maximize that winning setup. But first, we need to pick those winning setups. So that's why I stack my trades. I know how to pick winning setups, and when I find those winning setups, I maximize those positions. So yes, my name's Jamie Palmer, and that's the reason why I stack my trades. Thank you for watching.